You're watching Dukascopy TV. I'm Elaine Stenson. China's exports put in a stronger than expected performance in October, a positive sign not only for the world's second largest economy but also for global demand. Exports in October were up 5.6% from a year earlier after registering a 0.3% fall in September. The median forecast was for an expansion of just 1.5%. October's trade surplus takes the total for this year to $200 billion, the biggest 10-month total since 2008. I'm joined on the line now by Ricard Torne Codina, senior economist at FocusEconomics in Barcelona. Ricard, these figures exceeded the expectations of many analysts. What factors do you think led to an increase in demand for exports after such disappointing figures only a month ago?
Okay, I think that now we can see a mild recovery in global demand because the export growth in China was led mainly by stronger export growth to the U.S. and the European Union, and this is a good signal to the global economy.
Are you confident about China's economic performance over the next year? Premier Li said last month that China can't neglect the importance of exports, which supports 30 million jobs directly. Is there a risk that China is still overly dependent on exports for its economic growth?
I think that exports will remain strong next year, more or less at the same level of this one. Actually, according to our panel, we expect that exports will expand 8.5% this year and 8.4% in 2014. So we see that it's more or less the same level. It means a slowdown compared from, 2011 or 2010, but still resilient growth. About is there a risk that China is still overly dependent on exports for its economy? That is, of course, so China has a model that is based on investment and exports. So changing this model, it will take a long time. Not only, we cannot see changes in 1 or 2 years. We will have to wait maybe 5 years to see whether this model is changing towards a more balanced growth approach that relies more on consumption rather than investment and exports. So of course, we will see that a dependent economy on exports for next year and 15 probably.
Chinese leaders are gathering in Beijing this weekend for an important summit to make decisions on new economic reform measures. What are you expecting from this meeting?
Well, there has been much discussion about what and what not to expect in terms of reforms. My guess is that we will not see important announcements. We will not see a vast overhaul of the system. But I expect that the meeting will unveil smaller steps in the right direction. Right direction means that we may see some reforms, small reforms, or small announcements on interest rate liberalization, fiscal system reforms, state-owned enterprises, or maybe an overhaul of the government administration. But I repeat, if we see something, it's going to be a very, very, very small reforms. I think that we are not in the right time to expect, a big reform.
Finally, Ricard, in the past, China has come under criticism for releasing inaccurate and inflated data. Do you think that this has affected the way other countries view China in terms of trust and reliability?
Well, first of all, no one can say for sure if they are releasing inaccurate data on purpose. Okay, that's the first thing. In the second stage, you have to distinguish between national and regional levels. In general, the national government provides, in our understanding, provides more reliable and accurate data. The problem sometimes is that data from at the national level is fed by regional agencies, and here is the problem sometimes. At regional levels, local authorities tend to inflate economic data in order to be promoted within the party, okay? And it misleads the statistics. Some people claim that there are also methodological problems, as since mid-80s, economic data has been collected separately at the national and regional levels, and often using different methods of calculation. But we have to be optimistic because the national government has started to unveil a series of measures to tackle statistical issues. For example, you may remember that we had very strong figures for exports until May this year. It was mainly due to marquee export transactions to bring hot money into mainland China. China's authorities, more or less in June, started to struggle to crack down on these practices, and apparently they succeed by implementing new regulation. Also, and this is a very important point, is that the national government has launched a national audit to know the real size of the country's debt, because much of this debt is hidden at the regional level via local government financing vehicles. Another interesting point is that the new administration, in our opinion, is interested in improving the accuracy and reliability of their data. This administration, also the Xi Jinping and Li Keqiang, I think that they will reduce incentives to inflate data, as they are trying to achieve a more sustainable growth, which means lower growth rates. For investors, we think that if the markets see that the government tries to tackle data accuracy, then it will boost confidence among investors.
Ricard, what does this data say about the global economy?
It's only 1 month, it's only October, but we see that China's exports recovered, okay? And it may signal that the global economy is recovering too. But we have to be cautious because we need more data to confirm that. But certainly, probably we are in the right direction. But let's see, we need more data. So tomorrow we will have more data for China, and next week for the European Union. But well, anyway, it's a good thing. It's a good sign for the global economy.
Ricard, thank you very much for joining me on the line today. And that's all from me this week, but do check back for more interviews and updates on Monday. Have a great weekend. Bye for now.